Hello and welcome everyone to our first Beacons webinar of 2024, How Creators Can Save on Taxes and Other Personal Finance Tips with Jess from Carry Money. We are so excited to be here today. Thank you all for joining us live. We have a great number of people in the room already, I can see. So thanks for saying hi in the chat. Hi, Chris. Hi, Julie. Hi, Cameron. You guys can just say hi or let us know where you're chiming in from. I also want to remind you before we jump in to please put your questions for Jess in the question box. That is over on the right-hand side of your screen. There's a little Q&A box with a question mark. If you put your question in the chat, I will try my best to make sure it gets answered, but the chat moves very quickly. So it's sometimes easy for things to get buried. And if they're in that question box, then we will make sure that we do get to answer them. And just in advance, pro tip, if you are having any technical difficulties, try refreshing your screen or exiting out and coming back. Or sometimes I have heard from participants in our webinars that there is a blue unmute button on mobile on the screen. So if you can't hear us and you are looking, if you can't hear us, you can't hear me telling you to look for the unmute button. So I'll put that in the chat while I hand it over to our amazing speaker, Jess, to introduce herself and get us started.
Amazing. Thank you so much. Hello, everyone. So nice to meet you. Like Isabel said, the official title for today's workshop is How Creators Can Save on Taxes and Other Personal Finance Tips. But really the goal here, and I think it's great to see so many people here like for the new year, is to help you really kind of see how this whole personal finance tax landscape works. Because I think so often, especially if you become a creator, we're so focused on learning how to do marketing, email marketing, video, like growing a business, that it's often, I think, the last thing on our mind to learn about how do we actually save more of what we're making. So that is the goal for today. Let me make sure that this is, yeah, perfect. So yeah, my name is Jess. I'm co-founder at Carry, and we're a financial platform for entrepreneurs and creators to help them build wealth, whether that is through tax advantage accounts, getting set up with a personal or financial advisor. But I'm also someone that I would say is not naturally gifted at learning about personal finances. It took me a long time having to speak with the work that we're doing with different experts, having to read just like countless articles, doing like certificate courses. And I share that with you because I think often when we're learning about personal finances, it can feel like it just comes naturally to people, and that's just not often the case. So my goal is to really break things down in a digestible way for you today. All right, so just to kick things off, can you type into the chat and let me know, we can do like a scale of 1 to 10, but how do you currently feel about managing your finances? 10 being just like, I've got this, I'm an accountant, and 0 being, I'm just so overwhelmed. And I can see, oh, nice, Isabel says 7, 6, 5, 4. Okay, awesome. And hopefully this is great for you guys to see too, that there just really is a range here. But this workshop is going to be for you if you are, yes, a creator, but maybe you're also a business owner, a side hustler, a freelancer, or you're thinking about doing this and you want to know, like, okay, how does this work when it comes to finances? But echoing on what I'm seeing in the chat here, this is going to be helpful if you do feel overwhelmed when it comes to money, or you feel like you're on this quote unquote business growth hamster wheel where you're so focused and your time is so consumed on how do I actually make more money that the concept of keeping more of what you already have is just like way just like down at the end. And you might also be someone that procrastinates because you feel like, hey, I don't have time to learn this. This isn't fun. So yeah, the goal is that you leave here today just either feeling less overwhelmed, but hopefully excited so that you can see what's out there. And I laugh at Papa in the chat who says, procrastinate creators? No. Awesome. So yeah, just before we dig into these tips, a couple of legal things. This session is not tax or legal advice, financial or investment advice. I say that not just because we need to, but also to protect you. Everyone's situation is different. Regardless, never take advice from someone on the internet without consulting with an expert. So with that, this is our agenda. We're going to talk about leveraging business expenses. Then we're going to transition into some tax saving business structures. Well, one in particular. We'll talk about why there are benefits and why you potentially should hire your kids or unemployed family members. And then the last, but I think the most exciting one, is the solo 401k. But before I do that, does that sound good, Isabel? Please type in the chat as well. Let me know that you guys are still here.
Yes, we are still here. If your chat is not loading and you're not seeing new messages, sometimes it's your internet connection. That's happened to me before. But we got lots of answers and great vibes going on over here.
Amazing. All right, so let's go into part one, leveraging your business expenses. Now, I'm curious, for those of you that are here, you have a business already, who here is actively claiming their business expenses on their taxes? Type into the chat, let me know. And I think like across the board, for the most part, most people know that there's business expenses, there's write-offs, like we kind of conceptually understand this. But there's a couple of things that I want to set up on like the foundation side, just to ensure that we're on the same page. First, a huge misconception is that people think that when it comes to business expenses, it is a one-for-one comparison. So they think that, okay, if I have $1 in business expenses, that means that the taxes that I owe get reduced by that same amount. Not the case, and I think a lot of people get surprised when they see the taxes that they owe, and that's because business expenses are tax deductions, not credits. So a tax deduction actually reduces the amount, reduces your taxable income. Tax credit reduces the taxes that you owe. The second thing is that, once people start a business, they're like, oh my gosh, I can just expense everything. There's that iconic scene in Schitt's Creek where he's like, it's a write-off. But really, really important to note, any expenses that you want to take as a deduction in the eyes of the IRS and the government have to be seen as ordinary and necessary. So an easy way to know like if it usually fits that test, and I got this from Laura Lynn Wilson, who's an amazing CPA, is that if you were to reach out to 100 other people that do the same work as you, they work in the same industry, would they be taking that same deduction? So you should be able to be like, okay, this is actually pretty standard and it's not an unusual thing for me to want to write off. And then last but not least, just remember, yes, you get a deduction, but you're still paying for these things. So you don't want to just spend money because it's a deduction. Make sure it's also something that's necessary. Now, with all of that though, I do think that there are a lot of things that people are paying for out of pocket that they don't realize can actually be eligible business expenses. And type in the chat and let me know as I'm going through these, if these are things that you're actively already claiming or maybe ones that you didn't know. So for those of you that work from home, this is a huge one. Your internet, your phone bill, any of your home office expenses, even if you're looking at furniture, lighting, things that you are actually using for your home office or to do your work would be an eligible expense. Taking a step further, when you're working from home, things like your utilities, your car if you're using that to travel for work, your rent, mortgage, property taxes, all could potentially be eligible business expenses. The only thing to note though is like when it comes to your home, you can't just claim your entire mortgage or rent. It's going to be a proportional square footage. So if you have one room out of your entire house that you use for like your office, that's what would be taken into consideration. The next thing though is that a lot of people will either want to travel more or they'll want to go to a conference or event, but they just can't necessarily justify it. But when you have a business, as long as there is some type of like business related travel or like there's something that you're doing there for business, you can claim travel, accommodation, courses that you want to take, tickets to conferences, things like that. And then, yeah, I had to include this. It's actually a GIF, but this is a PDF, so you can't see it. But just remember that, yes, you have write-offs, but you're still paying for these things out of pocket, so you want to be wise about it.
That was one of the toughest adult life lessons to learn. I feel like we are told all along about tax write-offs, and then you learn the difference between a deduction and a credit, and that's not the most fun thing that ever happened to me. So
it definitely is a rite of passage, but it's also nice, I think, like hopefully you learn these things in the first year. It's not like too crazy. But yeah, just a good thing to keep in mind. So I think this is pretty standard, right? This maybe may feel basic or you've heard of this before, but I'm going to throw one more out at you, and it's not necessarily an expense, but it's called the Augusta rule. And I'd love to know in the chat if anyone here knows about it. Isabel, I don't know, are you familiar? Have you heard of the Augusta rule before?
No, this is a new one for me. I'm excited.
Okay, so this one, when I learned about it, I thought, I was like, there's no way that this is even legal, but it is. And it came from, if anyone's like a golf fan, the Golf Masters in Augusta, Georgia. They had these events, residents there were renting out their homes for the people that were traveling to watch the Golf Masters. And they were like, hang on a second, all this rental income that we're earning, we have to pay taxes on. So they had enough power to lobby and pass what is now called the Augusta rule. But one of these things is that you can actually benefit from it yourself. So the way that it works is that your business can pay you rent to use your home, whether it's for like a retreat, a work offsite, something that is like related to your business for up to 14 days a year, and you can receive that total rental income tax free. I'm going to say that again. You can rent your home to your business, and your business can pay you money for up to 14 days a year, tax-free. Now, people hear this and they're like, oh, well, you know, actually the rental rate for a night is about $2,000. You need to ensure that the rate is actually like a fair market rate. If you were to go onto Airbnb or rent out a similar space, it should be comparable. But this is just a huge one that a lot of people don't realize actually exists. But yeah, so a couple caveats though. Your home can't be your primary place of business. And it's also not possible if you are set up as a sole prop or a single member LLC. So those are kind of the two caveats. And of course, always speak with your accountant. Don't just like rent things out and not pay taxes. But a lot of people don't realize that this is actually possible. And can you rent your home to your business if you don't own your home? No, I'm 99% sure no. There might be some type of workaround if you're like, but generally like no, you have to be a homeowner. And Lila, it's for the US. I don't know if we have anything similar in Canada, but this is specifically for the US. So all of that, just like to kind of start things off, I hope you can see that this is just one of the many reasons why if you are based in the States, and I think in a lot of other countries too, there's so many opportunities when it comes to taxes if you are a business owner. Now, if you are just like a full-time employee, you don't get to expense things like, you know, your phone bill, your home office, you renting out your home to your business. So there really are a lot of things that you can do here and leverage. Okay, that was part one. Now let's go on to part two, which is tax saving business structures, or one in particular. So I'm curious if you can type into the chat, what type of business structure do you currently have? Type into the chat, and Lola's wondering, will we cover examples of tax credits? No, there's a lot that we want to kind of cover into the session, so only did the business expenses. Ooh, okay, this is great. I've seen a lot of sole props, some LLCs, none. Okay, great. So if you're already a sole prop, you probably already know this. But a huge tax saving opportunity that a lot of people miss is actually how your business is structured. So generally speaking, a lot of people, although it sounds like you guys are ahead of the game, will just by default either be a sole proprietor or they'll set up an LLC. Now, people will set up an LLC because, you know, the thought process generally is that I want to separate myself and my personal assets from my business. So if my business gets sued, you know, someone can't come after me personally. And we think that like, okay, I've got an LLC. I feel like this is great, very professional. But an LLC doesn't have its own tax bracket. If your business is set up as an LLC, it's actually a pass-through entity. So your taxes work the same as if you were a sole proprietor. So what does that look like? When you're a sole prop or you have an LLC, you know, you're generating revenue in your business, but all of that revenue comes to you as income and you report all of it on one tax return. Now, This is great because it's super simple. It's, very inexpensive as far as doing your taxes. However, there is a specific tax called self-employment tax, and that is roughly 15.3%, and that goes to Social Security and Medicare. Now, that's fine, but when you are set up as this type, the full amount that you're making, there's nothing you can do. All of that is subject to 15.3% tax. However, if you are self-employed, and I would say like the sweet spot is around $100,000 net a year, this like tax Twitter, people go back and forth on what this number is, but generally we think like 100K is a sweet spot. It may make sense for you to elect to be taxed as an S Corp if you're an LLC. So here's what happens when you're an S Corp. Same thing happens at the front end, right? You're operating your business, you're generating revenue. However, rather than all of that money coming straight to you, going straight onto your personal tax return, you actually pay yourself a fair market salary. And then the rest of the revenue that was generated can be paid out as distributions. Now, why is this significant? Why does this change things? Distributions, yes, you still have to pay taxes on them, but they're not subject to self-employment tax. Only your W-2 income is. So, as an example, if you made 100K and you did nothing, that entire 100K as an LLC would be subject to 15%, so around $15,000 just in self-employment taxes. If you elect to be taxed as an S Corp, let's say that you pay yourself what you deem as a fair market salary of $50,000, so you split it in half. The rest gets paid out as distributions. That will significantly reduce the self-employment tax that you have to pay. Now, obviously, this is offsetting a QBI deduction, which we're not going to be talking about because it's a super complex topic. But you can see just like that shift alone significantly reduces your taxes.
A couple of questions popped up in the chat on that one. If the business earns 100K or if you earn 100K, so that's your revenue for your specific business structure, not including any other income you might have from W-2 or outside sources, but it's not a net figure. So it's not necessarily that you're paying yourself 100K out of your business, right?
Yeah. Now, but here's the thing. If your business is making more, it might make sense to pay yourself a fair market salary of 100K. So this isn't that you have to pay yourself 50K. It's just that, when you're looking at if this makes sense to you, generally speaking, if your business is making 100K a year net, that's when it makes the most sense. And actually, I've got a line here just to kind of break that down. The reason why it probably doesn't make sense for you just to do this if you're just starting out is that there's additional costs involved. So when you have your LLC, if you're a sole prop, one tax return, you can just like even TurboTax you can use just to file it. However, when you're set up as an S Corp, there's more admin costs, accounting fees, you have to set up payroll. So there's just like an added level of complexity that 100% can make sense if, you are saving more than you're actually spending. But that's why, again, always speak with a professional in your area, just because, we've spoken to people who their accountants didn't bring this up to them and they actually were perfect candidates for this. But, you also could be a startup or you want to raise money and it actually might make more sense to be set up as a C Corp versus an S Corp. So always have someone look at your specific situation, but this is just something to be aware of that often people sleep on. Now we're going to go into part 3, which is hiring your kids and family. And I always as well, this is a funny one because I think initially when we start talking about this, people are like, you shouldn't mix family, friends, business. That seems like a horrible idea and potentially, so this isn't life advice, but I'll break down just some of the financial benefits of why you might want to consider. So for this example though, this is if you have kids, it also could be if you have retired parents or family members that aren't currently working. Reason number 1 is that, if you have a kid, a teenager, let's say that you hire to work for your business, it reduces your taxable income because what you are paying them, let's say if you're paying them less than $14,600 for this year, that's, the business expense, operating costs, so that reduces your taxable income. However, That is the standard deduction amount for 2024, which means that your kids won't have to pay taxes, and below the amount won't have to file a return either. The second thing, and I think this is probably the most notable, is that you now can set them up for retirement early. So when it comes to retirement accounts, even if you are a billionaire and you have kids, you can't just set up a Roth IRA for them and just max it out. With your retirement accounts, you can only contribute earned income, so money that you have personally earned from employment. Now, for this year, the contribution limits are $7,000 a year. But by hiring your kids, that means that they're now eligible to start maxing that out. And really, the earlier you start, the better, which I'll show you in just a moment. But the way that it works is, let's say you've got, a 15-year-old that is like really great at social media. And you're like, you can help me grow my YouTube channel. Let's say you're hiring them, they're working, 20 hours a week or 10 hours a week, paying them like a fair salary. You then can have them max out their Roth IRA from that earned income. And this is just like a really brief kind of overview of what that can look like if they start maxing out from 13 to 21. Now, obviously, this is not like a set in stone, like things can change, but by starting their retirement contributions earlier, just like the saying goes, time in the market versus timing, the longer that you are invested, the more powerful that can be with compound interest. It's definitely not something that you want to sleep on.
And I will say too, take care of yourself first. If you're not maxing out your own Roth IRA and solo 401k, which we're about to talk about, make sure that you do that. That happens a lot with families, parents. You want to build generational wealth and take care of your kids, but put on your own oxygen mask.
100%. Also, just want to just clarify too, because I see someone saying about family vlog channels. So look, it's your comfort level. Personally, I wouldn't recommend, like, there's people that have like their 2-year-old and they're paying them money to model for their like Instagram or whatever. Like, I think like you want to do things like with integrity and also just ensure that you can back it up. I think having a teenager that is genuinely helping you through social media is how I would approach it. Or, people like they'll have their parents manage their comment sections or emails that they get from support tickets. Definitely don't, like, each their own, but I think just make sure that you're doing things right. Okay, Charlie, really great question. Does this only apply to family, or what if you pay someone else under 14K? So the reason why the kind of added benefit is hiring your kids is that, it's your kids. You can hire anyone. It's not limited to that. You also don't have to only pay them under 14,000. It's just that, to keep things easy as far as the standard deduction amount. That's why I use that for that example. Okay, now we're ready to go into solo 401ks. And I'm curious, type into the chat who here is like already knows about solo 401ks, or maybe is familiar just with retirement accounts in general. Because I think that this topic, whenever we start talking about retirement accounts, when we're looking at like taxes and savings and personal finance, we often think of retirement as something that's going to help us down the line. And we sleep on the fact that there's actually a lot of tax savings and just, things that you can leverage now as well. Okay, so when we're thinking of retirement accounts, especially if you're just now starting a business or you're kind of new to this world, I think the common association with retirement accounts is like your traditional 401k if you're in the States. So a retirement account that you get with your like kind of corporate full-time job. And seeing here, Tammy has a 401k through my nursing job. Awesome. Okay. So just to break this down, just to set the foundation, the way that your traditional 401k works is that, you are the employee, you have room every single year to contribute to your retirement account. You have an employer and you just hope that they are generous to at least match up to a certain amount or even actually contribute a little bit. But that's not always the case. So really you've got one channel that you can control, which is you, and then the rest is up to your employer. Now, if you run your own business and you don't have any full-time employees, the only caveat though is that you can have your spouse, but other than that, contractors are fine, but no full-time employees. You can set up a solo 401k. And this is a pretty powerful account, and I would argue probably the most powerful retirement account in America. And I'm going to break down why that is and how it works. So, previous example I showed you, you have your retirement account, but really you only have one channel that you can leverage, which is you. With a solo 401k, you are actually sitting as both the employee and the employer. And on both sides, they have your best interest at heart. That means that you now have two channels that you can fully maximize. Now, the reason why solo 401ks are so great is one, they have the highest contribution limits of any major retirement account. So for this year, you have up to $69,000 and an additional $7,500 if you're 50 or older. And with that, you also can make contributions to either Roth or pre-tax. There's also some people that are like, hang on, if I want to do Roth contributions, but I make over a certain amount, I don't think I'm eligible. You are, and you can do that by using a Mega Backdoor Roth strategy. So you can actually put that entire amount into your Roth account. Now, I think, type into the chat, I just wanted to break down how Roth and pre-tax works, because I think sometimes we'll just like say those terms and maybe we don't really realize how it works from a tax perspective. So I'm going to dig into this, but if y'all already know this, let me know and I can just go quicker. The way that Roth works is that you are earning income, earned income, and you are paying taxes on that. So, let's say you're earning $5,000 a month after tax, you're getting, X amount of dollars. Whatever is left from that, that is what you can put into your Roth or as a Roth contribution. Now, you put the money in your Roth, it's invested, it's growing over time, it's compounding tax-free. Because you already paid taxes for it on the front end, when you retire, you can pull that money out tax-free. And you've seen some pretty wild stories of, Peter Thiel is probably not the best example of this, but grew like $1 billion Roth, like a self-directed Roth account. So there's just some wild examples, but the point is you're paying the taxes now, but then whatever that account grows to after it's compounded by the time you retire, you can pull out completely tax-free. Pre-tax, the way that this works is you're earning, let's say, $100,000 a year. You put money in as a pre-tax contribution. Let's say in this case, it's $1,000. What that does is it reduces your taxable income by the amount that you put in for that year. So if you put in $1,000, your taxable income then would go down to $99,000. So this is great, right? Because you can reduce your taxable income. The only thing to consider, though, is that you're putting your money in, you're investing it, it's still compounding tax-free, but once you get to retirement and you want to pull that money out, you're going to have to pay taxes, and it's taxed as ordinary income. So those are just the two differences, but just helpful to kind of point out, because I think sometimes we just kind of throw these terms out and we don't really know. Now, within that, with your solo 401k, another benefit is that you can invest in basically any asset class. So beyond just your stocks and bonds and ETFs and mutual funds, you can invest in startups, crypto, real estate as well. Not saying that you necessarily should do that, but that is definitely possible. You also can borrow money from your plan at any time. So you can borrow up to $50,000 or up to 50% of your account value, whichever is less, for anything. Now, people hear this and they think, okay, yeah, but there's going to be a penalty, or what does that look like? The only thing that you have to consider is that you will have to pay market rate interest. However, that interest goes back into your solo 401k. So that's a pretty cool feature that not a lot of people are aware of. So yeah, that is everything. Oh, sorry.
That is really cool. I didn't know that about being able to borrow money and have the interest go back into your account. So yeah, I have definitely learned a few new things here today. I hope everybody in the chat has too.
Yeah, so just to recap, we talked about some business expenses, your business structures, S Corps, hiring your kids and family, and also solo 401ks. So yeah, I hope this has been helpful just to kind of point you guys in the right direction. Hopefully you learned something new. Would love to know if you want to type in the chat. Let us know if there was something new that you learned. we'll go into questions as well. But yeah, just I hope that you know that there's just so many things that you can leverage. Historically, though, just like knowing where to start or what to do has been difficult or overwhelming. So yeah, if you'd like to learn more, you can visit us at carrymoney.com. We've got some special bundles that are available. And yeah, if you want to learn more, happy to chat more about that too. But yeah, thanks guys.
All right. I'm excited to jump into some of these questions. I appreciate everyone who asked, and we are going to run through them. Some of the answers might be quick, like we don't have the information for that, send us an email or, something like that, but we will try to address everybody who took the time to ask a question. So this question was about expenses in relation to income. What if you spend more in expenses than what you make in 1099 income? Q4, you made 3K, but your expenses were also 3K. So how does that work?
Yeah. So again, I am not an accountant, tax lawyer, so I'm very comfortable. Like I said at the beginning, like I'll say I don't know. We can get back to you on that. But you 100%. So like if you earn $50,000 and you ended up spending more than that, you're operating at a loss, so you don't have to pay taxes on that. Obviously, because you weren't profitable. The consideration though is. People will like there's this kind of debate of, and we talk about this, like if you have a hobby, it can be a really great thing to turn into a side hustle, because now, like for example, I love candle making and I was paying for all this stuff out of pocket, and I was like, oh, I can start a candle making business. But in order to claim all your business expenses and all of like the things that you're doing, you're going to have to show that you are operating like a legitimate business. So you can't just keep taking losses every single year, not paying taxes and getting all the stuff that you can write off. But yeah, if you're at a loss, then you wouldn't have to pay taxes.
Amazing. Are self-employed people required to pay taxes in quarterly installments? There are.
Yes. Yeah, there is actually let me get there. We have a great article on this quarterly taxes. This is actually something that people don't realize. Here we go. Estimated taxes. I'm gonna put this in the chat. You do, and there's penalties if you don't, and the threshold is actually surprisingly low. So yeah, if you expect that you're going to owe at least $1,000 in taxes, and this is from 2023, you would have to potentially pay quarterly taxes. But yeah, the whole article is here, but definitely, I think people think that you have to be earning a lot of money to be required to do that. That's not the case.
Yeah, for sure. We answered this one kind of, it came up in the chat before about the Augusta rule, but this was a US focused conversation for the most part. With much love to our global friends, we are actually having a webinar next Thursday about taxes and money that is for global focus. So I'll be sending out more information about that. Don't miss it in your email.
And I definitely relate because I'm Canadian as well. I actually am now back in Canada, so I just did a whole course on like Canadian tax law. So if you have any questions about that, happy to talk.
Nice.
Z. Oh, sorry.
Go ahead.
Z is like, is there a 3-year rule? Like you can't take a loss in the 4th year. This is, I actually recently dug into this one. Sometimes people think it's like a 5-year rule. I think if you're meaning like your business can't be operating at a loss after so many years, it's not necessarily the case. Like you just have to be operating a legitimate business. But yeah, I'll definitely like speak with an accountant just to make sure that you are operating a legitimate business. Mm-hmm. But there isn't like a set rule. Like after 3 years, the IRS knocks on your door and says, "Hey, get out."
Okay, great. How do I set up a solo 401k? If I Google, multiple brokers come up. Is there one that's better than the other? Is this something you guys do at Carry Money?
It is, and I swear, Jenny, we did not ask her to ask that. So I obviously work for Carry, so we help people set up solo 401ks. I can talk about why people are using us over other providers. I've got a couple slides here. I held off just because I didn't want to go into it. But basically, you can set up solo 401ks with Carry, IRAs, brokerage accounts. We do it incredibly quickly. You can do it within 10 minutes. You also get connected with a financial planner to get custom advice. And then we also have built-in investing. The thing that makes Carry different to other providers, though, is that we allow you to do the more complex tax saving strategies easily. So things like the Mega Backdoor Roth, backdoor IRAs, setting up recurring contributions, which actually for 2023, you get about, I think it's $500 a year tax credit if you set up recurring contributions with, you can do it for a solo 401k. And so, but a lot of providers don't allow you to do recurring contributions, or it's incredibly difficult to you have to fax forms and it takes hours to fill out PDFs. So we keep things super, super simple. And you also can do things like a self-directed IRA, which is where you can invest in things like crypto startups. We also have a bunch of courses as well, if you're interested in learning more about it, and office hours where we do every week, where you can get more of your questions answered with different financial experts. So yeah, that wasn't a setup. Like, you know what, you might as well.
Well, I set you up a little bit. I didn't plant that question. It just worked out great that somebody asked that. So I had a feeling you would have something to say, and I'm so glad that you did, because we definitely recommend that you guys check out Carry Money. And on this question, I will plug Beacons a little bit. So when getting paid for sponsored posts, brands that have worked with me want to use PayPal or Venmo, how do I track these payments for my taxes? That's on you, right? I think is the answer. You have to keep track, and I maybe keep a spreadsheet. But if you use Beacons, you can send invoices through Beacons and you can get paid directly into your bank account. And then you can keep tracking your income dashboard so that you have an easy report to pull at the end of the year.
Same.
I've been an S Corp for the entire year of 2023, but I never set up payroll to pay myself monthly. Can you pay yourself out now in a lump sum and have that be tax deductible for 2023?
That I'm not sure of. So we can definitely find out for you. But yeah, I don't want to say exactly because I'm not sure. I don't want to.
For sure. Tax questions are tricky. I took a speaking course. Can that be written off? I think maybe it's you're kind of up to you and your business and how you can show that it relates to it was a business learning expense or something.
Yeah, I think the best is we did a course with Laura Lynn Wilson, who's a CPA, because we've got different courses inside of Carry. This one was on taxes and bookkeeping for business owners, and she basically said it's that test, the 100-person test, where if you were to go to 100 people that worked in the same industry as you or did the same type of business, would they be doing something similar, claiming something similar? And then also at the end of the day, there isn't an automatic, when you file your taxes and they see okay, hang on, you did a speaking course, that's an automatic, nope, that doesn't work. At the end of the day, it's if you get audited, you have to be able to explain and justify why that is a legitimate business expense. But yeah, generally speaking, you should just ensure that it's, I would say public speaking likely is if you're doing that within your business. A candle making course, maybe not. So, but it's definitely up to you.
This one, we may not be answering this for sure. This is not legal advice, but I think if you didn't purchase it in the current tax year, you can't claim it as a business purchase, right?
I don't know about this one. Can we actually save? So what we'll do is we can send out an email because we have accountants at Carry, and I want to run all these questions through them so we can send out an email after just addressing them because those are really great questions and I just want to make sure I get you the right answer. So I'm not sure.
Absolutely. All the questions remain available that were asked in the chat and in the question box, so we can look back through them, and they have a name assigned to them, so we can get back to you guys by email. This is related directly to something you were talking about. If you're paying your family, can they have another job?
Yeah, totally. So there's a difference though. So if you, let's say you're hiring your teenager, you're paying them the standard deduction amount. It's up to, I think, 14,500 or 600 for this year. In that case, they wouldn't have to pay taxes, and it's under that amount, file a return. You can have multiple jobs, but then what happens now is that your kid will then will pay taxes. They'll have more money to contribute to a Roth IRA. But yeah, you wouldn't get any of the benefits there. So yeah, no limitations. They definitely can have multiple jobs, but it usually is just nice for people who are unemployed or want just like a little bit of money on the side to put towards retirement. But yeah.
Amazing. Do I have to 1099 everyone that I contracted last year? I have an LLC, if that matters. That depends on how much you paid them, right?
I think, what is the, let me find out for you.
We'll find out is the answer to that one. What if you established your LLC halfway through the year and didn't have it for the whole year? Is this another find out?
Question for you. How do taxes work if you establish your LLC halfway through the last year in terms of business expenses counting? So your business expenses are for the tax year. So like, yeah, it would just be for how long you were operating.
I like this one. I prefer to work in cafes. I get distracted at home. I think it's rude to sit there without buying stuff. Can I write that off?
Yeah, like again, eligible business expenses. You like technically, I go to a cafe to work. Part of that is like I need to pay for food. I think meals, like meal expenses, like a little bit trickier just because like it has to be within reason. And you could be like, well, why don't you make your own lunch and bring it to it? Like if you were working in an office, would you be eating out all the time? But again, it's like you have to be able to justify for why that is an eligible business expense. If you're doing a cafe and it's in the middle of nowhere and there's nowhere else that you can get food and you have to stay out there, like, it's up to you as far as like how you determine if that's eligible or legitimate. But I think that it depends.
Okay. I think we're sort of into the it depends questions or like very detailed questions. This really specific question about filing your first Schedule C, we might have to address that one later. Also, very specific question about car that weighs over 6,000 pounds, IRS Section 179 tax benefit. That, George, you really sound like you already know what you're talking about. So I'm going to say you probably know better than me on that one, but we will have somebody at Carry look at some of these and get back to you guys who have like really specific questions. One thing sorry, go ahead.
Oh, I think that's the one where it's like over if you like certain cars that you have for work can be like write-offs depending on if they're over a certain amount like in weight. I know exactly what you're talking about, but we can get back to you on like the specifics on that. But it's also why I think you see a lot of people driving around in G-Wagons because it's high weight.
Yes, exactly. And same thing, like, a couple questions here about deductions. I just wanted to address there's a difference, like you can itemize your deductions or you can take a standard deduction. So one reason why it's important to keep track of all your expenses throughout the year is so that you will know at the end of the year if you need to file itemized deductions, because then if it's above the standard deduction, you get more off your taxes. And so it's better to itemize them versus just taking the standard deduction. And do you know that amount, the threshold?
No, I'm trying to find, we have an article on this. I don't off the top of my head, but
I think it's like around $25,000. So if you're 100% sure that you are not going to come anywhere close to $25,000 in business expenses, you'll probably take a standard deduction. So you're not keeping latte receipts and things like that. But again, these are really specific personal questions. You want to talk to an accountant. You want someone to look at your specific situation. We are not lawyers. We are not accountants. Always our disclaimers here. So what happens if you hire someone international as a virtual assistant? How does that affect taxes? I think that kind of depends on they're filing their own stuff, like you're paying them through some sort of, you're paying the corporation, and then what happens there is not your problem.
Yeah. I think there's like in some cases there might be like a form that you have to fill out like for them in their country, or like they might ask you for some information, but they're contractors, they wouldn't be full-time.
Yeah, for sure. And one of my favorite questions, which has been asked many times, but we will always be happy to answer this. Will this be recorded and shared? Yes, absolutely. It has been recorded. We do post them at Beacons on our YouTube channel after a couple of days, if you want to check over there. However, if you have registered for the event, or if you register even after it's over, you can just come right back here to this landing page, thecrowdcast.io/c/carrytaxes, and it will be right here. Pretty much as soon as we say like goodbye and we're done, it loads right here, and you will be able to come back. The chat remains. You guys can keep talking to each other. The Q&A boxes remain, so we will be able to go back and look through these and see if there's anybody in particular that Jess said someone from Carry Money would get back to. You will be able to see all of those, and I still see questions coming in. These are still more specific questions. You know, if you're a fashion stylist, can you count clothing as an expense? There's something particular around that, like it doesn't always count, or it's tricky to count it. So you probably would know better than I do on the specifics of that.
Also, want to say too, if anyone is like a Carry customer, so we do weekly calls every Friday at 11 Pacific, 2 p.m. Eastern. And we have we'll have our got our accountants, our financial advisors, different team members from Carry that join. So yeah, if it's if there are any questions and you already are a customer or you end up joining, this Friday we'll be having one too. We can dig into those.
Amazing. I think that is a great place to leave it. How do you find an accountant who is well versed in the creator industry? We'll take that one as our last one.
It's so it's so hard to specifically for obviously I could say we've got Carry VIP, but we're on a wait list, so we're not taking any people there. I think the most important thing though to note is talk to a few accountants before you pull the trigger. And I think you should ask them about do they have clients that are in a similar industry as you? Are they familiar with how your business operates, how you earn revenue? Ask them questions, maybe some of the things that you kind of heard here today about I plan to make X amount of dollars. What would you recommend in this situation? And just see what people say. Because I think it's so hard to find an accountant that not is just good at doing taxes, but also you have a good relationship with. Because yeah, you don't want to be just meeting with them once a year. That's a tax preparer. Ideally, you want to be working with someone who can actually help plan out for the year, and you can kind of have an ongoing conversation.
Yeah, and I just dropped a link in the chat to our Beacons community. So I would say one great way to find an accountant who works in the creator industry is to ask other creators if they have an accountant that they would recommend. And you can do that in the community and lots of other things as well. It's a space where you can connect and find out information about more webinars and other educational opportunities that we offer through Beacons. So you can talk to our team, and we would love to have you in there. You can click on that link. If you get asked to fill out an application, like a wait list to join, just mention that you were here at the Carry Money webinar today, and I will make sure that we prioritize getting you access to that space. Is there anything else before we close, Jess, that you wanted to promote, or any links that you wanted to share?
I mean, we've just got our main link here, but I'd say the thing I would promote is if you feel more of an action rather than a thing, but it's normal to feel overwhelmed. There's so much that I'm still learning. We're talking with our accountants every single week and be hey, what about this? And what happens in this situation? So it's there's always going to be more that you need to learn, but don't let that stop you from just actually getting started and digging into this. Because I think even when it comes to retirement planning, it's I'll wait until I know the perfect thing to invest in rather than just kind of learning more about ETFs and index funds. Just don't let the fear of not knowing stop you from actually kind of taking action on this, because yeah, it can make a huge difference.
I love that. I think that's a perfect place to end. We're so grateful that all of you spent your time, taking action with us today and coming and learning. This was a great first step. And hopefully if you had questions, you got an answer, or you at least got a promise of a follow-up, and you know where you can go now to continue on this journey. So we will catch you all next time. Stay tuned for more emails from me about our next webinar. you were asking about global questions and international questions, we have a similar workshop with a slightly different focus next week. So I will be sure to send you an email about that. And everybody drop a clap or a thank you to Jess for sharing her expertise in the chat here. And we will see you guys next time.
Thanks so much, guys.
Bye.